Welcome back to the Broken Power Up podcast, the AIME podcast for strategies and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon and Haddad. How are you?
Good, man. Finally getting over this sickness that I've had for quite some time. I think that's taking over the country, but I feel a lot better.
Yeah, I feel like every day I'm talking to friends and finding out another person is sick. I feel like every single day.
Yeah,
But,
Sean Hatala was like, "This is called like the super flu pandemonium."
yeah, it had a really long name.
What is going on?
But yeah, I mean, even in work, out of work, there's a ton of people getting sick. So hope everyone is feeling better soon. But we have a lot going on today, a lot to be discussed. The Broker Buzz, where we dive into the top posts of the week for the Brokers Our Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we'll go into a sales pitch training where John helps us become better salespeople. And we'll wrap things up, as always, with story time with John. But first, a fortune cookie, which I picked the most disheveled. Bag is already almost pre-ripped. That means it has to be a good one, right?
Mm-hmm. Or it's empty.
Or it's empty. Well, it's not because I could see it, which is the benefit of the broken ones. But right now, there's energy pushing you in a new direction. You want to take it or do you want me to take it?
I feel that one. I feel that one. I think the energy that you talk about is I think it's accountability is that energy, right? Like additional accountability. This is year 3 of AIME. I'm taking on new ventures outside of AIME, right? And so just that energy, that additional accountability, the strength. My kids are getting older. They're in school. The responsibility is increasing in my life. So that's what that one feels like for me, right? Like, hey, the energy's shifting. Not good or bad. It's just, hey, it's going to require more from me, more from my family, more from my wife, more from everybody around me. So I like that one a lot. What about you?
Yeah, I mean, I feel like this is the first. This will be the first full year in my new position at AIM. So really, making some big decisions at the beginning of the year that will affect the whole year. That I think in a positive way. And I have just kind of like your first year, there were things that were already set in motion, and so similar to my new role. And there were things set in motion last year, but now this year, I feel a lot more in control of the direction my team is and our stuff goes. But then outside of work, I felt a really big urge to disconnect from screens as much as possible,
Mm.
especially working from home. It's and having my screen be here at home that I work at. So I'm reading books a lot more and doing some miniature painting, and my wife and I are getting into like building like these bigger Lego construction things and just putting a movie on. We've been diving into the Olympics, which I know is a screen, but it's 2 weeks of the every 4 years. But not focusing on it and have it be more of a background noise while I'm doing something, opposed to constantly staring at a screen or looking at my phone. And funnily enough, I think my watch helps me stay away from screens a lot as well. Having the Apple Watch and it just like being able to stay connected because a lot of people need to reach me, but also I can just at a glance at my wrist, be like, "Oh, is this important?" No, it's not. I can keep going. Opposed to pulling up my phone, potentially being like, "Oh, it's not important, but let's check Instagram." Oh, but let's. So it's just there's a lot less of those muscle reflexes getting me trapped back into a screen.
You utilize everything. I feel like you think through like every little thing. Like now you got me thinking about charging my Apple Watch. I'm like, I like the framework around using his Apple Watch. That's what I started thinking about. It's a great framework.
It helps me. It helps me declutter my digital day, if that makes sense.
Yeah.
But let's dive into the week with our first question. Help. Trying to prove child support payment and who is paying them. She's using a way to go card, which is a loadable card that many state and government agencies and employees use to distribute all kinds of different funds. For example, tax welfare payments, unemployment, child support, temporary assistance, LEAP, payroll, workman's comp, etc. The problem is that it doesn't specify that her ex is the one making the payments on this. and we can't find a way to document this otherwise. X will not cooperate. Ideas? I can't be the only one dealing with this.
So this one is obviously a little different. You're right. You're not the only one that'll ever deal with that, especially with an uncooperative ex. One, the first thing I would challenge you on is can you have your attorney reach out to his attorney, right? And like the documentation that was there, yes, this is coming from him, something along those lines, but let attorneys handle it. Yes, it might cost the consumer a little bit more money, obviously, because they have to talk to the attorney as part of this, and there's probably a charge to that. I assume it's not free to talk to the
Yeah.
attorneys, but you will need something from the other side. You won't be able to just proceed with no documentation verifying who's actually paying the monthly amounts on there, especially being loaded onto a prepaid card like that. I know it's common, but there needs to be some sort of documentation tying it back to the person actually paying the child support on a month to month basis. So that's your best bet. That's where I found the most success is going straight to the attorney, skipping all the BS and just having them handle it.
Yeah, because then you'll get an answer. And that document, I guess, a document from the attorney just saying that he's making the payments is that count? That works?
Yeah, so you'll need it might they might want it something a little more extensive from them in order to make it happen, but generally speaking, yeah, something from them like it's because it'll be a court order. There'll be
Yeah.
some sort
Okay.
of agreement that was written that they
Yeah.
should have access to, and that generally they might give you some leeway on there when you're trying to verify how much is being paid.
Got it. Hope that helps. And our next question, for those of you using third-party loan processors, do they usually give you a specific intake form to use, like an email template, web form, etc., or do you just send files over in your own format?
My experience with third party processing is they now it depends on the size of the company you're working for, but most will adapt to potentially what you're looking for, right? If you've never had a processor or an LOA on a file before, you're going to have a hard time initially upfront letting go and you're going to tell yourself that, oh gosh, like I have to do everything. So one, just know that that's a normal mindset to have. It's a mindset all of us have going into delegating some of the work, but understand it's not true. It's just a matter of communicating at a high level and telling people exactly how you like your business done. It's not always easy, but there's a way, there's a method to it, and you just have to tell them. So work together. You want some sort of ability to track what's actually happening. So I do suggest some sort of intake form whether you're using Arrive. Arrive has the functionality for you to structure and set it up inside of the system to where basically they have to fill out a few things before the loan gets sent over to processing. But I do strongly agree some sort of intake form.
Got it. And our second to last question, we got four, well, three in a statement. Our last question, is there anything I can do for a 1099 borrower who had declining income in 2025 because she took 3 months off to have a surgery? With 2025 numbers, it's not looking good, but even if I could average it, would help significantly. I'd love any insights.
Okay, so you are not out of luck here. Believe it or not, what you need is documentation, a doctor's note, letter from disability, potentially, if she collected disability. You can actually exclude those 3 months as part of the calculation and get it removed from the average altogether. So you're completely allowed to do it, but the client has to be basically on the actual they have to be disability basically that they're on and removed from their job, and they need some sort of doctor's note that says they can't work. They should have this already. Their employer should have it as well. But as long as you get that documentation and submit it to the underwriter or get a written verification of employment and have them sort out, hey, client was not working. She was out for a medical reason because of a surgery. Those 3 months will be excluded from your calculation. So you're not out of luck. There is a way around this. The agencies are generally lenient enough as long as you can provide support and documentation. I have closed hundreds of loans doing this, loans other people couldn't close simply because they didn't subtract some of the time that a client was off for disability, surgeries, things of that nature.
That makes a lot of sense.
Mhm.
And our honorable mention. Do crackheads say, I can't get high today because I'm broke? No, they make it happen. Don't let a crackhead hustle harder than you. I was going through Brokers Are Best and I found this post and I almost keeled over laughing because it is true. Like it was a very it was in my head. It was very motivational. I find it funny. I I found it humorous, and but it also has a good point of just like motivating you to remind yourself that there are others out there trying really hard, and you should as well.
I loved it. I saw it too, and I thought it was hilarious. And obviously, there were some people on there that didn't think it was as funny. But to me, to your point, it's like even someone like that is like they're hustling, like that. I know we joke around and we're joking and whatnot, but there are people out there that are hustling no matter what it is that they're doing. We get the opportunity to sell mortgages for a living. We get the opportunity to help people live the American dream. Don't get me wrong. I know we have bad days. I know we have to put food on our table. I know we got to make money, but we can always do more every single day. We could always hustle harder, especially in this environment right now with interest rates starting to drop and refinances being more and more open. But are you putting in the work? Are you putting in the time? Are you working incredibly hard to make this happen on a day-to-day basis? And that's where I would challenge you at the highest level possible. So I enjoyed it quite a bit.
Absolutely. Well, if you want your questions answered on the Broker Power Up podcast, become an AIME member. Join the Brokers Are Best Facebook group. And when you leave your post, if it's a question, put hashtag Broker Power Up and we will get it here on the show. And then we'll let you know when we answered it back in the group. So stay tuned for some posts in the group where you can see where we answered all these different questions. If you're not an AIME member, scan the QR code in this next ad or go to aimgroup.com and check out all of our AIME member offerings. And we'll be right back with some sales pitch training.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com /membership. Your community is waiting.
And I'm waiting to become a better salesperson. John, what do you got?
Yes, sir. So what I'm going to talk to you all about today is presenting a 20-year mortgage option and how to present it when you're calling your past clients, when you're checking in with people, when people are reaching out to you. So I want you to envision this scenario, which happens very often in our space here. So imagine you did a purchase for a consumer. You did a 30-year mortgage. Client had a 700 credit score. They did 10% down, so 90% loan to value, and we have a $300,000 loan amount. If we close that client, call it 2-3 years ago, you would be looking at an interest rate of 6.75%. So if that client has a 6.75% interest rate on 300,000, they have a 700 credit score. Their payment at 6.75 is going to be $1,946 a month. And then they also have mortgage insurance at 10% down, 700 credit. That's another $81 a month. So their total payment will be $2,027 on a monthly basis. Now, they've been 2-3 years into this mortgage. If you look at the 20-year mortgage at a 5.75 interest rate, and let's just assume this client's credit score went up just a little bit to 720. So we got a little bump at 720. At a 20-year mortgage at 5.75 interest rate, the principal and interest would be $2,106, and the mortgage insurance would be $41 a month for a total payment of $2,148 on a monthly basis. So what you're looking at is a difference in payment of $120 between doing a 30-year and a 20-year mortgage note. So how do I set this up for a consumer? Because if a client's at a 6.75, the 30-year might not make the most sense for the consumer right now. Now, these are for clients. You pull their credit, you see that they don't have much debt. Their debt to income ratio is in a really good spot, like 35-ish%. Everything basically checks out for this client. They've been really going on the up and up. I love the 20-year mortgage for this reason alone. So the first thing that I say to clients as I walk through is, hey, I'm going to look at a few options here. But one of the options that a lot of my clients have been taking advantage of, we're bandwagoning, is the 20-year mortgage note. So in your case, we're looking at shaving roughly 7 years off of your loan. And I think there's a chance to do it for roughly $30 a month, or sorry, $30 a week is all it will cost you for you to pay this home off 7 years sooner. So as opposed to you being 60 years old when you pay it off, you have the chance to pay this off when you're 53 years old, 7 additional years of financial freedom. So if you're like me, Mr. and Mrs. Client, you probably nickel and dime yourself if you look at your bank statements, right? You're probably going to the gas station, Starbucks, 7-Eleven, whatever the case might be. You and I both know you're easily spending $30 a week on things you shouldn't be spending on. Is that a fair statement for me to make?
You'll make a $30 purchase and forget about it.
And so that's what I do. And I ask them those questions, Tommy. And then the idea around it is I walk them through building equity, right, in their house and what that would look like. So Mr. and Mrs. Client, you have to ask all the questions here, but you told me you want to be in this house an additional roughly 5 years. Is that fair to say? Yep, that's fair to say. So even if you look at the 20-year, after 5 years, the client owes $253,000 on this $300,000 loan on the 20-year. And if they stay in their current loan for an additional 5 years, they're going to owe $272,000 on their current mortgage. So you're looking at a difference of $20,000 in equity for only an increase of $120 a month. So you're looking at roughly $1,500 a year over the next 5 years. So you're looking at $7,500 of additional payments that you're making that's going towards principal, but you're setting yourself ahead $20,000 in equity, all by you staying focused, dialing in, focusing on financial freedom, and finding a way to come up with $30 additional dollars a month. Is this something you believe you and your family can pull off to help accelerate your equity when you go to sell in the next 5 years? And these are the questions I ask. And team, I would challenge you to just open the door. If you really want to take it a step further, like I've done, get their bank statement. Take a look at it. Look at their bank statements. Ask them to send it over. You're just reviewing. You're going through a few things. Check their assets out. I love going through it line by line. What are you spending money on?
That could be subscriptions.
That's my point. And you'll easily find, you're going to easily find $100 with almost every client. Now, don't get me wrong. There are some that are super dialed in and every dollar is accounted for and they're very specific. But there's majority of clients are not in that position. So the 20-year mortgage is underutilized. It's a great product right now. Shaves off roughly, I mean, depending on their rates, a lot of these clients right now are in the 7s. I gave you a 6.75. You might even be in some instances based off the loan amount. If the loan amount's probably maybe $200,000, the payment might even be close to the same if PMI goes down enough. I mean, you're talking within $20, $30.
Sure.
Yeah, cut off that much time for only $20, $30 a month is a no-brainer. Price it out. Take a look at it. You're going to love it. Ask the right questions to the consumer. Get the bank statements if you need it. But people are people. They're just like you and me. Like Tommy said, you'll spend $30 randomly at Target. right? By accident. Oh crap, I just bought batteries. Cost me
Batteries,
$30.
deodorant. You walk out, it's $50.
Yeah, that's it. Whatever it is, right? So pay attention to it, ask about it. That's my tip for this week, and I hope it helps.
Help me. It's funny. When I think it was like a year and a half after, it was when I was close to when I was starting at AIME. I had been at AIME for a couple of months, and I did the math calculator if my wife and I had done the 20-year instead of the 30-year, and we really wish we had done the 20-year instead of the 30-year.
Well, for you, the one thing I will say, if you don't mind,
Yeah, no,
because of the rate that you have,
yeah,
because you have a two, what do you have?
3.1,
3.125. You have a super low rate.
Yeah.
That 20-year note was probably like a 2.75 maybe at the time. So
Yeah.
for you in this instance, just because when you did actually close on your house, like even for me, I have a 7-year ARM at 1.99, right?
Okay.
It just makes more sense for you to apply more towards principal of what
Yeah.
the 20-year payment would be. Like, so I
Okay.
would actually, yeah, because when the rate's that low,
Yeah.
it doesn't necessarily make sense like it does here. Now, if there's a massive spread, right? If you could have got a 1.99 20-year mortgage, yes, I'd have said,
right.
yo, dude, like that makes
Yeah.
sense. But the spread at the time, I think, was about a quarter, maybe 3/8 of a point. And
Okay.
I would, even if you were talking to me as you're low, I'd have been like, hey, Tommy, I think the 30 makes sense. And whenever you
And
want to
just throw
apply more. Here's what the payment would be on a 20-year mortgage. Here's the extra that you would need to pay this off in 20 years.
Cool. Well, glad I made the right decision then.
Yep.
Cool.
I think you did. I really, really do.
Cool. I'm not worried about it. We're very comfortable.
Mm-hmm.
But yeah, if I can lay up the question of you're coming off of being sick for a week, you got a bunch of catch up to do. What's your game plan? It's something people will inevitably other leaders have to deal with, and connecting back, and because everyone goes down, everyone's human, everyone gets sick. How do you get back to peak mental performance and hitting all the meetings and delivering on all the things, and just getting back to normal?
So, yeah, I mean, I think one of the big things for me right now is just dealing with the stress and the anxiety of the big picture items. So, the first thing that I'll do once we jump off this call is probably just put on my headphones, lock myself away, and reply to all emails, anything that I owe from a delivery standpoint, and just get that out of the way as fast as I possibly can. That's the first thing I'll do. Second thing I'll do is I'll make phone calls that I'm backed up on. So, that'll be the rest of my afternoon is probably a tremendous amount of phone calls just to get on the right track. Then from there, get to the gym today for sure. Make sure I stay dialed into the gym, sweat out a little of whatever is left in me, and just get myself back on the right track. Make sure I take all my vitamins today. I usually drink a gallon of water, so that's important. But basically just get back into a routine that I've had prior to this and get to it as fast as possible. Even my meals, I eat every 2-3 hours, not skipping the meals. That's always hard after you're done being sick because you're not really that hungry. So again, just jumping into the routine as fast as I can and just ripping a Band-Aid off one at a time, not getting too overwhelmed. And if I do, just get up and walk out of my office. I mean, I'm really good at. I'll just get up and go for a walk, make a phone call. That helps tremendously, but don't overcomplicate it either. I don't want to give you 15, 20 different things you can do on how to get yourself back on track.
No.
It's all internal. You're going to have anxiety. You're going to have the stress. We're in commission sales that never goes away. So those are my steps. And I hope that helps.
Yeah. And I think it's one of those things where what it comes down to is if you want to boil it down to one thing, is when you aren't sick, making sure that you have that solid routine and that gets everything done in your day, because if your body almost craves that after a while when you're sick, like you have those goalposts that you can get to and ways to like stay hydrated. And like mine, I get up, I have 2 cats, and so I'll get up if I'm frustrated or just need a break from the screen for a sec. I'll get up, go pet the cats, and I feel better, and then I come back and then I'm refreshed and I'm good to go. Everyone has their own little things. No one's going to have the same things, but I do think drinking a lot of water and staying hydrated is one that everyone should do. And I know most people do not drink enough
They
water.
don't. It's so under. I always get shocked. Like even my wife,
Yeah.
she's getting better at it too now, just because of me. But it is crazy to me how many people just don't drink a lot of water. It blows my mind.
Yeah, I saw a reel the other day that this guy made his wife cover her eyes and was like, "I got you a present," and she was like, "What's this about?" He was like, "Well, it's about your drinking problem," and she was like, "I don't have it." He's like, "You don't drink enough water," and so then he had this giant adult sippy cup in front of her with this like whale at the top, where every time you were drinking the water, the whale would shoot out.
Yeah, that's
And
hilarious.
and so she was like, "This is for a child. I'm not using this." And he's like, "Just use it." And then she used it, and then she loved it. And it was just,
Dude,
it's
you
just
got to make
what
it fun.
exactly. Like I have this nice water. I bought a nice water bottle, and I was like, I'm never. And it's the amount of water I drink after it is just tenfold. It's just getting the right container. I think it is a weird thing, and it's a big obnoxious thing that I then miss in my peripheral vision if it's not there, and it's not just like forget about it kind of a thing. And I've also noticed that ones with straws are also actually bad for your teeth. But
I just found that out, by the way.
yeah,
I didn't know that was a thing.
yeah, I was having some like gum recession and stuff from using a water bottle with a straw, which is wild. But today I learned on Broker Power Up podcast to drink more water.
And don't use a straw.
And don't use a straw. And thank you, listener, for tuning in to this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel. Ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up, and remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.